Good evening. I'm Epstein with your SPDR ETF stock market wrap-up for Thursday, the 13th of February, 2025. In my financial market video, I go through what I believe President Trump did today with tariffs, explain, I think, why he did it, how it's going to work, and where it's at. Rather than give a couple of minute description, I invite you to go there for it. As for the PCE number that is derived from CPI and PPI, the PPI numbers today that came out were hot. They were bigger than the market looked for. Yet, when you put them into the spreadsheet to come to the PCE price index, you will see that that shows that for the Fed, one of their favorite numbers is that PCE is falling. Crazy, I know, but that explains why the market was going up. I was watching Bloomberg and the numbers came out. I'm watching them go, why are we rallying? And the bond market took off to the upside. You would have thought the other, that they'd all be diving. And I was watching, and then I turned on CNBC, and they're all going, you know, I'm going to have to dig into the equation. Steve was going that I got to see the changes they made. Everybody was confused at first. And it made sense because on the surface, that's where it was. I wrote about where the inflation showed up in those numbers, and it's still very problematic along the way, all right? But it gave the market some relief. And then, of course, going into the tariffs today gave relief. And when they were finally announced at 1 o'clock, they didn't break the market at all. The market was able to hold on and rally. And that's because if you go look in my financial video, you'll see how that came out. As for data tomorrow, let's get away from this and get for the data tomorrow. There we go. The January import-export price index data will come out tomorrow at 7:30. The advanced retail sales data, and this is an important number. The Fed likes to see this number. Once you see how the consumer's doing, that's at 7:30. At 8:15, we're going to get the monthly industrial production and capacity utilization. That's also another interesting number. I think the business inventories, especially for December, they don't mean anything at all to me. We know that people were front running, taking in inventories, getting ready for Christmas and the tariffs that might be coming on. They knew all this already. So that's what I think was going they wanted to avoid. So I don't think it'll have much of an impact on the market. When we come to the marketplace, wow, Tesla up $20 today. That's pretty strong. NVDA back up another 4 on the day. Amazon, reversing the loss that it's been having, up $1.40. As we look at Google, hanging in there. Home Depot, well, you know, I'm liking some of these, especially if interest rates start falling. That gets interesting along the way. GDX adding another 38 cents, and gold up $2.64 in the GLD today. Gold's at an all-time high in this. Rivian came back about 30-40 cents today. That came back. You've gone nowhere in uranium, up 80 cents. Let me say that. I knew it was backwards, something I just said. 80 cents in Rivian. Can't keep the market down in those low 12s. That's what the market is telling you. It's a value area, apparently. And all the stock indices finished on a good note. So let's start with our Uber. For the market, this is a new rally high all the way back, and I mean all the way back into the October timeframe back here. So this market keeps surging as we're getting closer and closer to all these robo-taxis going live. And obviously, they and Lyft and the other services, everybody wants to be there for the autonomous driving, so that's helping with that. You've got the higher lows, the higher highs as it's going. Look at the crossovers that are happening. This is a long-term bullish play. So I think this market is a big move to the upside as this is happening. You got the 18 crossing the 200, and it's soon going to cross the 100, and then they're all lined up bullish. You'll have the shortest term average, the 18 over the green, the 100-day, the green over the gray, the 200-day, and that's bullish. Yes, you can get breaks in the market, and I'd expect them, but it's telling me that the long term, you're looking for one word, buy, 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 and that's where we're at. And if it fails, I'll let you know it failed. That's what I'm saying. It's running the upper Bollinger Band now. So you're developing that gorilla glue trade, which in turn creates an embedded reading, and we'll see if it does it. Now, it doesn't have to. It takes 3 days minimum for that reading to develop. You're just at the beginning cycle of it. Dutch Brothers, I told you yesterday the earnings and the numbers were a blowout. It was up 23% yesterday. It finished up 29. I mean, that's a year's gain if you're in that market. And you're going to see people that are smart are going to take something off the table. Yep. These type of spikes have a way of perpetuating themselves where they're running out of propellant. That's all I can say. I am not bearish. That's not what I just said. I said people will take something off the table to have buying power on pullbacks in the market. In CrowdStrike, you just keep churning out new highs. You go up to the Bollinger Band, you back up to the Bollinger Band, you back up. And this is all happening as you get that embedded reading. And that's the powerhouse reading that you hear me talk about with Bollinger Bands over and over. Now, you went up today in Rivian to the upper Bollinger Band. That's where I think the pros came out of the market. Right in that general zone as it got up there and they said, enough's enough, I'll take some money off the table. You have a market that's got a lower low, higher high. What else happened? The market held the whole challenge again of the 200-day average and when you look at it, the 18-day. The 18 was your resistance. You crossed it. That means on the next pullback to it, I expect to see the pros step back in if it does that, in between 1256 and 1271, those two numbers. When we look at K-Web, again, an embedded reading on pullbacks. The trade is buying the market and popping out, I think, against the 18-day average. I'm part of the position. They try to hold on as long as they can. It's easier to hold longer and longer term positions off the weekly charts, which we talk about on the weekend. But for the daily, it's how you get in sometimes to the weekly and you convert yourself over. I'll trade it off the weekly or the daily. You can mix match the two. Nothing wrong with that. Again, momentum trying to embed. This is so important, what's going on here. Toll Brothers, still not a bounce, all right? Now, question is, what do they do and how do you get interest rates to help them out? We know the demand is there. We saw today Fannie Mac came out and it said that interest rates 4 weeks in a row, they've ebbed down, not up. That's good. I mean, we all love that, but it's not getting much attention out of that at all. In Tesla, I expected a bounce on the first challenge, and we talked about that at the 100-day average in the Bollinger Band. Now, if you take a look at the close, it needs tomorrow to stay over the 20 level. And if it does, you're out of the embedded reading part. The market had hit its objective here and gave you a bounce. So that could spell that the market wants to go back up to the 18-day average. That number, the 18, will fall each day. That's the way the moving averages will work. When you lost your embedded readings here, you came down for your correction. But I think you're just caught in the financial services in the sideways action. I have a bullish bias, no question there. You'd have to take out the lows of Wednesday in order for me to not be bullish. And before that, you might be going to 52.19. It's not far. It's 40 cents away. So what do I care? In XLI, the market refuses to break down. And the industrial sector is still looking not well here. You need to close over 138.68, which is a combination of the 18-day average and the last high to give the market the impetus to finally say, it's through on the sideways action. Hasn't done it yet. In XLE, you took out the last break low. So all the energies are under pressure, not because of themselves, but more because of the possibility of Russian oil eventually coming back to the market with other OPEC oil, especially if the war can be resolved by Presidents Putin and Trump. I don't know if that can be done. And by the way, Zelensky, nothing's going to happen without Zelensky in the deal, all right? That isn't going to take place. Nobody's going to allow that to take place. On the other hand, everybody's got their own turf they're going to fight for. It's difficult when you've had this type of war, all these thousands upon thousands of people killed. And for what? I mean, that's going to be the hard thing. The hardest thing for Ukraine is going to have to be to bite the bullet on Crimea. The hardest thing for Russia is going to be that it's not going to keep the land that it's just captured, and nobody's going to trust Russia for a very long time to come. Maybe not again. Maybe not when Putin in power, but it depends who replaces him over time. In GLD, higher lows, higher highs. You can see where the market's sitting here at the upper Bollinger Band. Again, you lock in on these and there's opportunities. I have traders just yesterday I put out in the morning. I think they should get involved in the market again, and it worked out. SLV, you can see how the market is not trending. You have a lower low, higher high. You're just flub-a-dubbing at the 80 level. I don't see anything there. Copper came back. This is where the pros again are probably taking something off the table right here in the 100-day average. Yeah. Could it go higher? Of course it can go higher if the markets think something positive's happening, but that chart's already to the point of this overbought, not what I would call on my 10-star list that I'd want to go into. Gold's been such an easier trade. BND, lower highs, lower lows, and back up to the neutral zone. So often you go to that 18-day average, and that's where you can go, what do I do next? Because market's like a neutral number. Why? Because so many people use moving averages, whether they use the 18 I use, a 20, a 21, it doesn't matter. They're all similar. And it's a resting spot. It's where markets like to make something from. You watch the TV shows, be it on Fox Business, CNBC, Bloomberg. Moving average talk is all the time. Those that are more sophisticated start talking momentum trades through stochastics or MACD or RSI. Other traders will look at the Bollinger Band. Some will look at the Gann numbers, the Elliott numbers. I can go on and on. In my 60 years of doing it, I've taken courses in all of them. I've taught in most of them, not Elliott, not Gann, not Fibonacci, but cycles, yes. I used one of the best guys that I knew, a guy named Walt Bressard, who's no longer with us. He was just absolutely terrific. I think he had Cycle Trader. He was quite a guy and a neat guy. And I learned cycles from him. And I knew Bob Prechter from Elliott Wave. So I talked to them. These guys were all on my TV shows that I had over the years, and you learn so much. And you pick what you want to work with. It all gets confusing. If you use it all, they start fighting each other and you get confused. You got to decide what you want to use. All right. So I see the market coming back, and now it's got to make a decision. What is the trend of this market? It had been down. Is it going to neutralize that? That's the question it's asking. And I'm telling you, I suspect we have a top in the dollar. This chart may have called it better than any chart on the dollar. I'm looking and looking at this market. It hasn't recovered, hasn't gone back there. It's got all the makings of a major top in the dollar. Uh-oh, got to be thinking that. Get back over these highs, I'd go back to my drawing table. Until that occurs, I'm getting comfortable making these statements. And in the euro, if the dollar's acting bad, you probably have more room on the upside. Maybe you can get to the upper Bollinger Band. But right now, this market looks like a buy. And I think the pros are going to buy it here. Stops under that low. See if they can drive it. Is there enough to make some real money on? No. This is trading in 50, 60 cent increments. But a chart's a chart. And you look at it and you use it in your thinking maybe for other parts of the market. Now, as I said, I think that you trade without learning Bollinger Bands and how momentum ties in with them. I think you're trading like this because you'll look at a chart and you'll say over and over, why did it stop there? My course I created, I think it's last year I created it. Moving averages, Bollinger Bands, and my momentum oscillator. You put the three together and I think you have a trading tool. And off that tool, and I show you my version as to what I think with it, you work with long-term and short-term trends. I put it on weekly charts. I put it on daily charts of everything, spiders, stocks, ETFs. Then I include in the course, because I want you to join us every morning, but I give you free access to the complete futures research and the ETF. So you get both. This should say both. Also, the charting software so you can get everything doing the way that mine works on it. You get the swing lines. You're going to get everything that you need from there. And you come up with a game plan. It's 13 videos, each one meant to show you on older data what it is, because with the live data in the morning as we're coming in, you go, whoa, I see what he's saying. I see it. I get it. And I think it does change your attitude. You go to irepstein.com education. That's where you can get all this. You can move your cursor to the top there. That's the other way. Enjoy the course. I'll catch up with you all tomorrow morning. You take care.